So time for a new video. Yesterday I made a video when we were at the range lows right here and how I expected price to move lower for the rest of the week, since we took out at that moment our range low, our weekly low right there, in which the statistics pointed to us that the weekly high, which was this level, became very strong and our weekly low was very weak. And since we took that level out, I said you should not short range lows, like you should never do that, but you can watch for a move, for a bounce and short into that. So what happened today? Yesterday I mentioned that supply zone, you always want to look for levels where sellers can step in. And if we zoom in right here, you can see that we had this order block, aggressive move down, and that price exactly came into that level. So here locally it was a bit of a sketchy price action, because here we locally broke structure back to bullish, then we moved up aggressively into this level, took out all that supply, and then here broke structure, and then aggressive sell off. Right now we have a new weekly low right here. So we took our range lows and have a new weekly low. So I just wanted to make this video to show you what the statistics tell at this point. Like we can see that yesterday it played out well. We get the bounce and the further sell off into a new weekly low, in which our weekly high of course is still this one at Tuesday, but now our weekly low is on Thursday. So then we can just look at what the data tells us with this new information. If we look at the daily high is at hour 11 and the daily low is at hour 14. Just looking at that, we can see time statistics, low P1 flip risk, 9.9% of the days took out the daily high. Okay, so that means that this high, a 10% probability to be taken out based on time. Unlikely that P2 is in 84.5% of the days from a new P2 after 1430. Okay, so that also tells us that there's a 10% probability to take out this high, and there's like an 85% probability that a new low, or at least a new P2 will be made. So either that this low gets taken out or that a new high will be made, because this can become P2 if you take that level out, because then this is your first pivot and this becomes P1 and that becomes P2. However, likely that one of the two gets taken out. But let's look at distance statistics. Low P1 flip risk, only 26.4% of the days took out the daily P1. So in 26% of the days we would now see a move taking out the daily high after making a move this low. So that's also pointing out that the high is pretty strong. And then unlikely that P2 is in 86.2% of the days moved further than min 2.3%. So even though you might think this move is pretty strong to the downside, that only looks like that because we have been trading in a very tight range. But as the statistics tell you, in 86% of the days, price makes a bigger move. So it is, if we combine all these daily stats, it's very likely that this high and this low, at least one of the two gets taken out. But the low is more likely to be taken out. If we then look at the week, then we can see that our weekly high at this point is still that high and our weekly low is this low. So all this, I just mentioned the statistics, no TA or something else. Low P1 flip risk, only 3.8% of the weeks took out the weekly high. So at this point, there's only a 3.8% probability that we make a reversal from here and then take out the high. So that's strongly in favor for the bears. Unclear if P2 is in, 69% of the weeks make a new P2 after Thursday. So like almost 70% probability that this low or that high, but that high is very strong, 70% probability based on time statistics that this low will be taken out either today or Friday or during the weekend. Looking at distance statistics. Moderate P1 flip risk. So here 37% of the weeks took out the weekly P1. So based on distance statistics, which is the high from here, measured to the low from here, in 37% of the weeks, so 4 out of the 6 times, we would make the reversal back to the highs after making this much downside. Also favoring the peers. And then unlikely that P2 is in 97.9% of the weeks, moved further than 3.9%. So in almost 98% of the weeks, price will make a bigger displacement between your weekly high and your weekly low. And if we combine all that data, we can conclude that on the weekly, this is a strong high, this is a weak low. And on the daily, we conclude the same, but less strong as compared to the weekly, but that the daily high is strong, daily low is weaker. So combining all this info, it's still the same bias for me to expect lower prices for the rest of the week. This is a really strong high for the week, and in 98% of the weeks we make a bigger move down. As I said yesterday in the video, let's look at the weekly pivot zones. We can also see that we are still within our weekly P1 zone. 80% of the weekly P1s are between this high and this low. So that means that if we get a bearish week, it is a very high probability that we will make at least a way to this level. Or we must make a reversal in which we take out the weekly high, and then upside becomes more likely. But for now, all the statistics are pointing more towards lower probabilities to make for the rest of the week. So combining that info, we can add some TA like we had here. Price came into this supply, sold off, made a new weekly low. So overall, you want to hold this high and then continue to sell off. Then we can look, do we have created some fresh, well, this 4-hour candle has to close, but potentially this is a supply side in the making. Then on the 3-hour, which closes in 7 minutes, we can see a fresh supply zone created right here. Let's extend the range a bit. So now we look at 2-hour, it's the same area, 1 hour. Okay, so that tells us if we look at daily statistics, also this high looks pretty likely to hold, while the low is not that strong. On the weekly, this is a strong high, while it is very, very likely, like 98% probability that we will make a new weekly low either today, tomorrow, or during the weekend. So if you are not in a position, what I will be looking for is to see, let's zoom in a bit. Price often gives a retrace. So what I often like to do is just look for, like most basic technique is just the supply and demand zones, like I did yesterday. Price came into supply, sold off. Same could happen here. Price comes into supply, sells off, but it doesn't always have to be that deep. So what I always like to do is just use some fib levels to give you a bit of perspective. Then the OTE. Here you see the OTE. Well, I think everyone knows it, but often Fibonacci levels show you where the retrace comes, and that's often your lower high. If you can combine that with an imbalance and supply, then to me that's always an extra confluence. And that's what we can see here. Here we have candle open, here is less candle, so this is our imbalance of our fair value gap, aligning with our Fibonacci retracement, and on top of that we have a supply zone. Combine that with a pretty strong daily high and a weak daily low, you can see if price does something like this, shows weakness, break structure, get in a short, or it can go higher where you tap supply, then break structure, get into a short, target new weekly lows. Yeah, so that's basically what I want to say. just to showcase how you can use statistics and how with each low that gets taken out, you get new data. So yesterday we took out the low of Tuesday, in which our weekly low was on Wednesday. Now we have our weekly low at Thursday, which also gives us new data because we have new weekly low. But for now, statistics are still pointing downwards. And if we break down from this range, which has been going on for like 6 days, probably right now, 6 days, then you often can expect some follow through. And if we combine statistics with our current TA, where we have this downward structure, we could make our way to the levels I mentioned yesterday, which are, for me, I've laid them already out. Liquidity level right here, first area of interest, then liquidity here, and then we have demand zone right here. And we could go all the way down to the start of this liquidity trail. So that's what I'm looking for. Since we took the range low, if we hold here and form a local accumulation, that could change things a bit, but then it has to be really clean. And I want to see like this, that we hold around here, maybe take out the wick, and then it could potentially be a long, but for now everything to me is pointing towards more downside for the rest of the week. So let's see if the statistics continue to be accurate during the rest of the week. That was what I quickly wanted to mention. If you have any questions, let me know. Cheers.